recording. Cool. So let me know if you guys can see my screen. I'm just gonna share news here very quickly. Alright, can you guys see? Yeah, no, yes.
Yep,
Yeah.
coming up.
Cool. Alright, so as you guys can see, today was a no news Monday. We did not have anything today, which also explains the type of volume and volatility we received today. So yeah, man, it's expected. Also that big opening gap that we had, especially on Nasdaq and US 500. I haven't looked at US 30, but yeah, that also needed to be filled today, which is why traders were also but on the fence in terms of direction, because price was up, well, not obviously was printing for both ways, right? So overall structure was bearish, but price action on the day was bullish, especially on Nasdaq. And then the same thing kind of happened on gold as well. So we saw some consolidation on gold. So overall, gold is a bit bearish on the daily and weekly structure, but in terms of price action, it was pretty bullish on the day, especially the start of the day, right? So yeah, today we didn't really expect much. Tomorrow we are also not expecting too much in terms of good volume or good solid volatility to give us a nice push through in terms of price. Everything and everyone is still up in arms about the war and everything going on. So there's a lot of uncertainty in the markets. So what we'll see is a lot of traders are going to put their money into gold and particularly oil, especially during this time, because of the Strait of Hormuz and then the oil supplies being bombed, right? Which is never great, but I mean it is what it is. And then some might also look at silver. Okay. In terms of Wednesday, we are expecting CPI. In terms of CPI, the forecasted numbers are 0.2%, 0.3%, and 2.5%. For Wednesday, I'm expecting a lot of volume and volatility. So we could expect some spikes at first, some nice spikes, but I expect those spikes to come with some decent volume as well. So in terms of price action, we might have some good solid candles behind us to push structure to where it needs to go, right? So yeah, luckily for Wednesday also, we only have CPI being released, which is nice. There is not really conflicting interest in terms of price and where it needs to go. So which is going to be nice, right? So that's why I'm expecting Wednesday to be a nice solid trading day. Tomorrow we might also have a decent day, but most people are going to wait for this inflation data to come out on Wednesday. And then on Thursday we have unemployment claims. We've been having unemployment claims reports for the past few weeks. Not really a big driver in terms of price, but here and there it could cause a small spike, just for volatility, but nothing too crazy in terms of volume, right? So Thursday I'm expecting a slight spike in volatility after 2:30 or at 2:30 rather, and then thereafter we might have some good clean price action, because we again have nothing conflicting on that day, unless Trump and his goonies have some things to say and some things to do, and then for Friday we are expecting core PCE to come out, GDP to come out as well, and job openings to come out. So we have two news releases, right? Well, not two, three news releases on the same day, but two of them are at the same time and one of them is a lot later in the day. So this is after New York Stock Exchange open. So there is going to be different, I wouldn't say different opportunities, but in terms of price, we might see some consolidation around the first part of the day with some volatility. So you might see some spikes, and then between 2:30 p.m. and 4 p.m. we might see that consolidation, and then after the job openings reports come out at 4 p.m. we might only then see that follow through, right? So yeah, that's what we are. Well, that's what I am expecting in terms of price action on the day. Okay, but yeah, that's really what I'm seeing for the week. Some consolidation here and there in terms of news, and then some spikes here and there. But we have a relatively good volume-based trading week this week, right? If everything goes well. So yeah, let me just quickly cross over into the charts and share my screen there. Alright, let me know if you can see it. I assume so.
Yep.
Awesome. So yeah, in terms of price action today, right? I marked out our opening of the day. So for a lot of you guys to not be confused also, especially some of you guys who joined now, what I typically like to look at is the pre-market open. So the pre-market opening candle for me will always be 8 a.m. New York time, right? So UTC -4 is right there, New York time on TradingView. Because we also have the change in daylight savings time, it pushes our opening time 1 hour back for us, right? But it's the same time for them. So UTC -4, 8 a.m. is there. I then also look at the 1 hour order block high before pre-market open. So pre-market is 8 a.m. And this is the first 1 hour order block. So as you go through the course content, you'll be able to see, what I refer to as the order blocks. And there's the 1 hour order block high, and this right here is the 1 hour order block low. Okay, there we go. So there's the low, there's the high. In terms of price, we always look for consolidation, manipulation, and distribution. Okay, but now on the open, we had some conflicting price movements, especially because we had that big opening gap. Let me just show it to us again. Refresh this one right here, right? So this one needed to be filled, whether it was today, tomorrow, next week. Price will always want to fill these imbalances, okay? But now in terms of structure, let me just show you structure for the day. Structure overall, right? Don't just look at the day. The day is bullish, but overall structure is bearish, right? And that's why we saw some consolidation and some volatility around the open. If you look at the weekly as well, the weekly is also pushing quite bearish, right? But we are still within this consolidation range, okay? This order block range right here, okay? Now, going back down to the 1 hour, right? We can see our high being taken out, our low being taken out. Now, let me just quickly go down to the 5 minute for us, and then I'll quickly walk us through all of it, right? So like I said, we always want to wait for consolidation before market open. Okay, this consolidation, and then we had our first leg of manipulation. Okay, this manipulation happened before market open. Okay, if you look at price in terms of time, because time is very important when it comes to price. In terms of time, this is before 8:30 a.m. New York time, right? If I just do this and show you guys, that first push above the high happened at 10 minutes past 8 a.m. New York time. So that's 10 minutes past 2 p.m. South African time, right? So this right here is the first leg of manipulation, which does sometimes happen, okay? But at 8:30, what we can expect, right, is a push in either volume or volatility, okay, or an increase in volume or volatility. So at 8:30, we saw that there was an increase in volume, right? Why I didn't say volatility is because we didn't really have any spikes on the 5-minute, okay? But if you look at the 15-minute, you'll see volatility, okay, like this. That's volatility. This is volatility, okay? So not really volume. It doesn't show us where price is going. It shows us where price went, right? It shows us intent. So price then came back into the range. We then expected a new set of what's the word now? Manipulation again, because there was no entry opportunity for what I'm looking for, right? I want a good break, a clean break after market open, and there wasn't anything, right? There was only that break before market open, and then before New York Stock Exchange open, we can see price still ranging within our opening range, right? In terms of the 9:30 opening candle, we can see that we had this spike in volatility right here, okay? 8:30, boom. 9:30, boom, right? In terms of price action, there was still nothing to enter off of to go back into this range imbalance for me, right? Price just wicked into it, which showed me its intent. So price does have an intention of going back in there, but price action is just way too choppy today, right? I don't like trading price action like this. I only want to trade what is clear, okay? So 9:30, price then came outside of the range. Now this is the real leg of manipulation, okay? These first ones that happened, these are all just, for show, because there's no clear intent for the market yet, right, in terms of price action. But now, if you look at this low, our low was taken out. If you also look at price action in terms of our order blocks, right, and again, you guys will come to learn or understand how I view my order blocks. So if you look at this 5-minute order block right here, okay, in terms of price action, this is a low probability 5-minute order block. What does that mean? It means that we can't really base structure off of this, because this will easily be broken. It shows you that the market tapped into this range high here, but it did not finish its business up there, right? So that's something that you can look at. The same with this one here. We can see that the bullish candle's wick is longer than the bearish candle's wick, right? And this is how you spot a lower probability order block, okay? Now, if we look at price action down here, where price took out the order block low of the 1-hour time frame, right? Came back into the range and closed into the range, okay? If we look at this 5-minute order block down here, what is this now? This is now a higher probability 5-minute order block, okay? So just off of an impulsive move, right, you could have potentially entered here. I didn't enter, like I said, and I outlined why also in the chat. It's because price is just way too volatile. It's not something I want to trade. I like certainty, right? So in terms of price action, there you could enter because you had your consolidation, you had your manipulation. There's your break of the low. Price came back into the range. The 5-minute candle body closed in the range, and we have to bodies outside of the range as well. That's something you can look at. Look for a decent 1 to 2 risk to reward. Boom. And there you have it, right? On this week also, you can see this is likely where most people's TPs were. Okay. So that is something that you could have looked at today, just in hindsight, right? I know price was very choppy, you didn't trade it, but you always still want to look back and see what happened in terms of price. So next time it happens, you can recall it, right? All right, and then in terms of the 15-minute, right, here you can see it's just chop, 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 chop. Because structure only cleared out, let me show you. And what time was this? 10:30. This was around 4:30 p.m., right? This was way too late for me for an impulsive move, okay? I don't like trading impulsive moves so late into the session, right? Because there's often very little volume for price to follow through. And if I were to do something like this, let me just quickly show you guys, where I found an impulsive move higher, price would likely have taken me out at a stop, right? In most cases, that does happen. All right. But now in terms of 15-minute structure, not 5-minute structure, 15-minute structure, right? There was no entry opportunity here to long price or to buy price into this range for me, okay? Other people trade other ways, but in terms of my structure and my consistency, what I would have liked to see was price do something like this, right? Let me show you. So 1 to 2, yeah, just about. So what I would have wanted to see on the 15-minute time frame is for price to break outside of this range like this with this candle body, okay? Just like it did here. Boom, close there and come and fill this imbalance that it created here now with this impulsive candle, right? Some of you guys might call it an engulfing candle, right? So I want this engulfing candle to be filled before we get that follow through in terms of price, right? And I would have liked to enter at around the 50% of this engulfing candle for that continuation higher, okay? But now again, price action on the day and overall structure was not in line with each other, right? So overall price action, bullish. Overall structure, bearish, right? And this is where a lot of people blow their accounts, right? In times like this, it's just best to sit on your hands, right? Not every day is a trading day, okay? So this is what structure created for me today, okay? And hence why I did not trade it. Before I go into the overall structure for the week and what could be expected, do you guys have any questions for me? Nothing? Okay, I'll take that. But don't be shy to ask your questions, guys. And yeah. So yeah, in terms of the opening range and the impulsive moves and an intraday move, there wasn't anything, right? So let's quickly look at the overall structure on Nasdaq. Let me bring out the weekly time frame. So I'm not gonna go too deep, right? I'm not gonna dissect the monthly, but I'll just quickly show you guys in terms of the monthly and in terms of our order blocks. This is the current bearish monthly order block, which is still in play. We don't have a new monthly bullish order block, right? Price is currently still ranging in and around this area, so there's still no bullish structure to trade off of. Okay, the previous monthly bullish order block that we had in terms of structure was this low right here. Okay, these two candles, boom, boom. There's our order block from the furthest candle body to the furthest wick. Okay, there's your order block range. Price has invalidated that. Now what we'll see is lots of uncertainty at this point. Okay, because the new month just opened, we are now still waiting for price to create structure to trade off of. Okay, and this is why it's important to look at price overall and not just on the day, right? So we can understand the whole story that price wants to tell us. Okay, in terms of the weekly, right, now I'll delete the monthly structure. In terms of the weekly structure, what we have here, this is our current bearish weekly order block. And I always say that we need to look at price from both perspectives, right? We don't just want to stick to one, right? We don't want to open up price and then just see, oh, there's a bearish order block, but not look for a bullish order block, okay? Or see that price is breaking bullish on the day, but not really looking at what price could do from a bearish perspective as well, right? Or in terms of sells, right? So our previous bearish order block was this low right here. Let me just show you guys these two candles. Okay, this bearish candle and this bullish candle. Remember, for my order blocks, we always need two opposite candles, one bullish and one bearish, because that is when you'll see structure build. Okay, and then once price closes with the third candle, that then confirms that order block low and confirms that structure. Okay, so here we had a structure form from Monday the 9th of Feb and Monday the 16th of Feb, right? So these 2 weeks. The third week, Monday 23 Feb, this week confirmed this order block low here. Okay, so now price was ranging in and around this range here. Okay, this week, on the week, okay, this week of Monday the 2nd of March, this was last week pierced just below this order block low. Okay, and remember, I always say that the wicks kind of give you a pathway of where price wants to go, right? It shows you the intent of where price wants to go. So since price wicked past this low, we now need structure, okay, in terms of candle bodies, all right, for us to now form price and structure again. Okay, so price wicked below this low, showing its intent to go lower, and we obviously opened way lower. Why? Because the liquidity, right, what some people like to call it, or you can call it orders, or you can call it supply or demand, right, however you want to call it, most of the orders, right, or the next closest set of orders was at this weekly low here, right, of Monday the 2nd of February. Why did price break lower? Because it was closest to this set of orders right here. Okay, boom, and that is why we took out this low. Now, since this low here, this order block is invalidated, what do we need to do? We now need to find the closest order block to the left that wasn't invalidated yet, right? So price will either create the new order block here. As we can see, it's busy creating a new possible order block. And I mean, this also right now is very choppy. Okay, it's not the cleanest price action. to showcase this to you guys, but you know, structure and price action will always be the same. Highs and lows, right? So the furthest candle body is up here from Monday the 2nd of March, that week, and the furthest wick is down here, okay? Monday the 9th of March. This is this week's wick. This week, right, will still play around and bounce around here, but it could potentially create a new order block structure for us to trade within. And then next week, right, we'll confirm this order block structure. So we will then have a set of orders down here and a set of orders up here, right? In terms of the weekly structure, these will then be the closest points where liquidity is on the higher time frame, okay? Or where the market would want to drive itself towards, okay? Now, if we look to the left, the closest order block for us right now, and where the next set of orders are, or the next closest set of orders, is down here, okay? Down here. So if price taps lower or comes below a certain point in terms of our 1 hour structure or daily structure, we then know what to target, right? There's no point in getting into a trade if you don't know where you want to trade price to, okay? And for those of you who are in here for quite some time, you'll understand what I'm talking about. But for you guys who are new, please go look at the course content store, right? So price will most likely then drive towards either this low or this high next in terms of weekly structure, okay? But now this could take weeks, if not a few months, to play out, okay? So we'll skip this part, but this is just for you guys to have a bit of backing and a bit of understanding as to what price is doing on the higher time frames, okay? So now that we know price took out this previous order block low, price could come back into this range since the market is consolidating, okay? This was our previous order block low. I'll just map out the low here. So very similar to what we do on the 5-minute, consolidation, manipulation, and distribution. It's exactly the same on the weekly, on the monthly, on the daily. So since price broke below this weekly order block low, we had consolidation, manipulation, and if price closes in here for the week above this range, okay, the likelihood of price continuing higher is much higher than it going lower, okay? However, if this week, all right, closes down here, if this candle, this green one of this week, comes down and closes below this previous order block low, okay, what we could then see is the week thereafter either consolidate in and around this area or completely flip and go bearish to take out this next set of lows here, okay? So we need to be paying attention to what this candle is doing for the week to know what we can expect for next week already, okay? In terms of this week, or in terms of the next few days now, okay, we can then go down to the daily structure. So we look at the daily structure exactly the same as well, right? We want to find our order blocks where the closest set of orders are, okay? And then we want to see how far price is from all of those highs and lows, right? So let me just delete all of those. Now that we have an understanding of price on the weekly and monthly time frames, let's go to the daily, okay? On the daily, our closest bearish order block is this one, okay? And again, guys, you don't always need to go from the weekly, the monthly, right? You can sometimes just look at the daily and see what the daily structure is doing, right? That's our closest bearish daily order block. Our closest bullish daily order block is this one, okay? However, this one was invalidated. The next one that was invalidated was this one, okay? So this one is invalid. We can't look at this as a form of structure anymore. We can only look at it as a point of reference, right? Where was price? What did it do at that point? Did it close in and around that area? Yes or no? Okay. But we can't really trade from this level now and take buys from this level and put our stop loss below this level, okay? Because price has already invalidated it. It's no longer a form of structure for us. If we now look to the left and find the next closest one, right? This one was also invalidated by today's open, that wick there, right? Again, we don't want to look at that now. This one here, was it invalidated? No, right? Price just wicked into this order block, but it did not break the low, okay? Now in terms of this order block and in terms of the range high that is relative to it, and I know this part could become a bit tricky in terms of your fibs, but again, if you look at the course content, you'll be able to get a grip of it, right? So this low here is the furthest order block, the furthest bullish order block that was not invalidated yet. So now we want to measure price, right? From this order block low to the most relative high. We can't pull price to this high here, okay? Because price had already passed the 0% level in terms of this high, right? If we look to the left, if we look at the previous price action. So for us to now find the most relative high, we want to look at the furthest high relative to this order block. So which one is furthest from this one, right? And we need to pull it to the right now and not to the left, okay? This one right here, okay? So this is now our closest daily order block that was not invalidated yet. And this is the range that price is ranging within, okay? Now, with this, you want to see what price is doing in and around the fib levels, okay? For me, the most important fib level will always be the 78.6%, okay? Because that is your deepest retracement level, okay? If price retraces past the 78.6% level, you know, like with a candle body, and the candle body closes below it, okay, and a new one opens below it, you can already expect price to take out the next order block low, right? Just in terms of probabilities. So you already have a cleaner understanding of what price wants to do on the higher time frames, okay? Now, if price just wicks into the 78.6% fib, kind of like this one here, okay? Then if price closes above the previous high, okay, on the, well, past the 50% level. So here we have our 50% level. This was the previous high, just above the 50% level. If price comes, boom, closes above this high, then you already know price is more than likely to come and hit your 0% level here, right? So there are different ways that you can kind of trade this, right? On the higher time frames, if you want to swing trade and you don't have much time, once price hits your 78.6% fib, boom, you enter there, put your stop below the previous order block low. This will then be your first TP, right? That's a 1 to 3 risk to reward. If price closes above the 0% level, your 27% is your second TP. If price decides to, uh, you know, continue and continue its bullish run, right? Your negative 61.8 would then be your third TP, right? That's a 1 to 5 risk to reward. However, if you look at it, this will take weeks and weeks to play out, right? A lot of people don't have that much time to wait for a 1 to 5 risk to reward trade, because if you're risking $100, you're making $500. No one wants to wait that long, right? Yeah, and then if you really want to make decent money on this, you would either need to trade prop firms, okay, because that would allow you bigger accounts, because most people also don't have the size accounts needed to swing and trade for that long, right? But yeah, now that we have kind of a clear understanding of what price is doing in and around this area, okay, we can now base our next few trades off of that, okay? And like I said, we want to look at price from both directions. We look for a potential bullish move now, okay? But our bullish move would take a while to play out and develop, okay? And also in terms of the daily order block structure, right? This range here is pretty big, right? So now we want to look at price closer also. What does price look like for a bearish potential move? Now, if you look at the closest bearish daily order block, it's this one here, right? The one we mapped out earlier. This is the closest bearish one. And we now want to look at price and find the furthest low from this daily bearish order block, okay? Remember, we're still working on off of the daily time frame, and again, this part might be a bit tricky because now you went from that massive range to the small range, but it's all relative, right? You want to look at the most relative highs and the most relative lows, okay? So the most relative order block that we have here in terms of bearish structure is this one. We now want to measure this one, okay, and see how far price is from the 78.6% fib, okay? So the most relative low from this order block is this one right here, okay? This is the closest one, the newest one, and the furthest one, okay? In terms of price, what I now want to see is price potentially pull into this 78.6% fib and either, you know, wick into it or wick into a 1 hour fair value gap or 1 hour imbalance, right? However you want to call it, and then find some structure in and around this area and potentially trade lower, okay? So this is something that we could see on NASDAQ for this week also, okay? If you want to swing trade again, right, this would take at least a week or two to play out, but your first TP would be here again. It's a 1 to 3 risk to reward trade, okay? If price decides to continue, your next target would be the negative 27%. That's a 1 to 4 risk to reward. And your next target, if price decides to, you know, fall a bit more, would then be the negative 61.8, right? And that's almost a 1 to 6 risk to reward, okay? So now there's still some things that need to develop in and around this area for that opportunity to present itself, right? Now for us to find that trade or to find that potential move, we want to go to the 1 hour time frame, okay? On the 1 hour time frame, we want to see if there is a 1 hour imbalance. Okay, is there a 1 hour imbalance that lines up with the 78.6% fib? Kind of, right? We have this one here. Okay, so again, this will then be the next, or the closest draw for price to come towards, right, before it potentially goes lower, right? Again, we're looking at price from both perspectives. Okay, so this is now something that could happen on the lower time frames. Price finds structure here, breaks higher, boom, boom. Now, okay, let me rather not go into time when looking at the structure now, because I know you guys are still getting accustomed to the overall system, right? So what could then happen is, like I said, price tap into the 78.6% fib and then fall. Okay, but if we look at price in terms of structure, there is a 1 hour order block sitting on the 78.6% fib that's relative to this range and the range low, right? So what I see happen here is price break this high, tap into this fair value gap or this 1 hour imbalance, and either close here with a candle body. If price closes with a candle body above the 78.6% fib, what could we expect? Right? We could then expect price to, most likely, or based on probabilities, we can expect for it to then take out the next closest form of liquidity, or go toward the next closest form of orders, right, which are up here. If these ones get taken out, which is then the closest, these ones here, right? So it's kind of like a knock-on effect. It's like dominoes. Okay, however, if price decides to just wick into this 1 hour imbalance, right, it just wicks, boom, and we have candle body closures, right, inside of the 78.6% fib, what we could then see is a short sell-off. Okay, but now depending on what price action does the next day, you might see something like this, where price falls lower, takes out a few 1 hour order blocks here, and then the next day we could see a potential sell-off, or what you could also see is price come back, close above the highs, and now this will then fully confirm price taking out these highs, right? Boom. So this is kind of how you set your intent, not set your intent, but you base or form a story, right, based on price could potentially do, based on its overall structure, you know, where it is currently in terms of price, and then also what time it is, right? Because volume is based on time. Okay, it's either based on time or based on news. Okay, so those are some things that we need to keep in mind when we are looking for potential moves on the day, right? But again, Nasdaq, not the easiest to trade at the moment. Very choppy, in a range, right? There's no clear directional bias, and because overall, what typically happens with Nasdaq, the Nasdaq always goes higher, right? But now in terms of price action and weekly and monthly structure, it's bearish. Okay, so those are conflicting things. Okay, longer term investors are basically fighting shorter term traders. Okay, all right, any questions? I know that was a lot. Also not the easiest price action. Bless you. Any questions, guys? What's confusing? What's not? All right. Okay. All right. So in terms of price, right? If the daily closes bullish today, just based off of what we just outlined, right? That potential bearish move off of the 78.6% fib. That's a longer term move, okay? Or that potential of price going and seeking out these highs, right? What I am or what I would be looking for tomorrow or the day thereafter is, you know, a few more bullish moves, right? Up until price comes to the 78.6% fib, and thereafter I would look at price, what is doing there, and then if I want to then trade price lower or higher, right? But in simple terms, I'm a bit more bullish, you know, off of the first part of the week, okay? So I'm looking to trade the Nasdaq a bit higher. Dutch, I think that's Neo, right? I think you joined today. What's up, man? Not chart related, but where can I find the course recorded videos? I sent it to you. It's in the WAP. So under the WAP, you'll then be able to find it there. Or just send me a screenshot of what you see, and then I can then direct you to where you can find it, right? But yeah, guys, that's the Nasdaq. I see another message came through. Thanks, sir. You're welcome, man. Shamoon P. Shamoon P, what's your name, man? These Discord names, guys. How's it, bro? I'm good, I'm good. Shamoon. Am I pronouncing it right? Shamoon. I know you from TikTok. Welcome, bro. Sham. Okay. Alright, Sham. Welcome, Sham. But yeah, guys, that is what I'm seeing on, what's his name now? On the Nasdaq. Gold is looking a lot better, right, in terms of structure. I was actually looking for a few buys here on gold. Let me just see. Ugh, I just missed it. What's the time? 8 p.m. Yeah. So what I would have wanted was to enter here. So this basically just happened. And I was waiting for this move the whole day. So I'm looking for 1 to 3 risk to reward into these highs on gold, but the opportunity has already passed, right? But just to break down gold for the week, okay. If we look at the daily time frame now, right? So let's just quickly pick apart the daily so we can understand, you know, where gold is and what it is doing and why it's doing that, right? So in terms of our current bearish order block, we have this one right here, okay? Price has not invalidated, sorry, the current bearish daily order block, okay? Right there, price has not wicked past it, hasn't closed above it, okay? So there is still potential for price to continue lower, right? We still have that potential. So if today closes bearish, we could see shorter potential sell-off, either the early hours of tomorrow, or you know, during the later, well, during midday tomorrow, okay? and then gold could then potentially turn around and then close with a new daily order block to go bullish, right? Because overall, price on gold, I would say, does want to continue a bullish run. Let me just see what price is doing on the 78.6% fib. Yeah, so if you look at the 78.6% fib, okay, you can see that on the daily, price did, turn around at this fib level, right? However, if we look at, again, the daily order blocks, right, like I said earlier today, and this is a lower probability daily order block. Why? Because the bearish candle's wick is a bit shorter than the bullish candle's wick. Okay, this then shows us that there's untapped orders up here, all right, or the market still intends to potentially go higher. Okay, what we could also see on gold still tonight, right, if we receive enough volume in terms of price, this bearish candle could flip bullish, and even if it closes with a small candle body above this previous bearish order block, then the next day I expect price to be a lot more bullish. Okay, however, if we stay in and around this order block, okay, within this range, I'm not expecting gold to break these highs anytime soon, right? So by anytime soon, I don't mean tonight. That could happen either tomorrow or the day thereafter. Okay. In terms of a bullish order block, this right here was the closest bullish order block on gold in terms of structure. Okay, you can see that price broke past this low, and again, guys, it's exactly the same things, whether it's on the higher time frames, the lower time frames. We are looking for three things. Okay, what price is doing in and around that area, okay, and we are looking for how price did it. Okay, consolidation, manipulation, and distribution. Right, we want price to consolidate, we want to then to manipulate, and we want to then to potentially distribute. Okay, if we go to the 4 hour or the 1 hour time frame, we'll then be able to see price a bit more clearly down here. Okay, so 4 hour was just a wick, but on the 1 hour time frame we have a clear break, okay, with two candle bodies. Again, in the range we have price consolidating, then we had price manipulate past it, okay, to go and grab orders down here. Okay, and now we are waiting for price to potentially distribute higher to the next order block high, which is this one. Okay, all right, so if you want to trade off of the 1 hour structure, this could also have been an entry, right? You enter off of this 1 hour candle body, close in the range, and then you just trade price higher to the next range high. Okay, so this is very similar to the impulse entry strategy that I send out every day in the channel. Okay, obviously every day there isn't a trading opportunity, but this is the same form of structure, just on a higher time frame. Okay, with entry points on a higher time frame. But you look for 1 to 2 risk to reward, trade price higher. Okay, so yeah, that is the current range that price is in on gold, and this is what I am expecting it to potentially do for the rest of the night up until or into the next day. Okay, on the daily as well on gold, since it sorry guys, it's late now. Since it broke past this low of this previous order block, we then want to look at the next closest order block in terms of structure. Okay, this is the next order block. Okay, so now we know if gold is still bearish, right, it closes bearish tonight and it comes down to that previous low right here and closes with a candle body below this daily low, the next range of lows that price will most likely be driven towards is this low right here. Okay, price could then break past it, come back into the range and do something just like that again. Consolidation, manipulation, distribution. Okay, here, let me show you before I answer questions. So on the 1 hour again, like I said, price comes down, closes with a 1 hour candle body down here. Okay, the next form of liquidity or the next set of orders would then be here. That's where a lot of people would then take profits, and if price comes here, boom, you'll see it reject back a bit. If there's enough volume, it would then come down and take out this low. Okay, then depending on what price does in and around this area, you could then see potential reversal at this point. Okay, but this is just if price comes down and breaks this low, and if it doesn't close with a bullish candle tonight. Okay, that potential is still there. Yeah, let me see what the question is. Dutch, are we always looking to trade from a valid daily order block? No. So we are not always looking to trade from a valid daily order block. The reason that I map out the daily order blocks for you guys is so that we know where the closest forms of liquidity is, either for the next day or for the next few days, right? So we know what our overall bias is in terms of price. Okay, if we know that, look, this here, let me just unpack this for us. Let me just show you. Okay, because price has not closed today, right? Price hasn't closed with a new bearish order block here, right? Let's say it's okay. No, that's not going to work if I word it that way. Okay, so let's say price still hasn't broken past this previous order block here, right? What we know is that price is already, or was already, into this order block. Okay, so the closest form of liquidity is this range of highs here. Okay, so since there's no structure built off of this candle yet, okay, its intent is still to go bullish on the day up until it closes. Okay, only when this candle closes on the day, then that day is set. Price then needs to look for next objective the next day. Okay, but now since it's not closed yet, this objective here is still a potential for what price could do on the day. Okay, and this being the previous daily order block and price sweeping it, all right, what we could then see is price flip with this candle and continue bullish, right? Since we know that those are our daily order blocks, we know where price could then be pulled towards, because your order blocks will kind of act like magnets, right? It will pull price towards it. Okay, so since we know that, we then just want to align our lower time frame confluences with what the daily order blocks are doing, or where the daily order blocks are, because that is the next point of interest that price wants to trade towards, right? If that makes sense. So that is then your next target that you want to trade towards, basically, okay, in terms of structure. So that bottom wick is your manipulation. Yes, that's correct. So on the daily, it's a wick, right? On the daily, it's still a wick. That's now my manipulation on the 1 hour time frame. However, on the daily, if the daily closes bearish like this candle would then be my candle of intent, right? If price just wicks past the level, it shows you where price is then intended to go next, okay? So just to put it into perspective again, on the 1 hour, if price doesn't reach this high before the next daily candle needs to open, okay, there's a higher probability of price coming back down to these lows and coming to test these lows again, okay, because this bearish candle on the day, or this daily candle, would still be bearish and it wicked past it. There's no body structure yet, right? So this would then be the next order block, like this. And if a new candle forms tomorrow and this new candle is bearish, it would then come and test these lows again, like that. Okay, just in terms of structure. And then here we'll then see if price is just wicking past this low again, boom, or if it will create a structure in terms of candle bodies to then potentially flip and go the other direction, right? So it could look something like this. Bearish candle. So this is now Monday. Tuesday opens bearish. Tuesday completes that bearish move. Okay. Then Wednesday opens. Wednesday obviously opens bearish. Comes and tests the previous low there. Breaks past the previous low. Again, consolidation, manipulation, boom. And then what we could have is distribution back into this range, where this is now a green candle, okay? And then if price closes in this order block range again, okay, then you would have your next form of distribution on what day is it? Thursday. So it's Monday, Tuesday, Wednesday, Thursday, okay? So a lot of traders then get mashed up during days like this, where there's no proper structure yet, and the next day when they need to trade, okay, or on the Thursday when the distribution comes, they've already blown their accounts, or they've already failed the evaluations on Thursday, on what day is this now? Monday, Tuesday, because this could consolidate and wick around here. Monday, Tuesday, Wednesday, but now Thursday is your distribution candle, because the intent of the market was set here. All right, and then the follow through happens when there is proper structure down here on the daily time frame, and that could then be when it comes and takes out this high here. And when it takes out this high, we then have to wait for a next form of structure to form, right? So Friday could then open bullish like this, boom. Go and take out Thursday's high. Friday comes and tests this low again. If Friday closes in the range here, bearish, where's the next set of lows, or where's the next form of liquidity, right? The next form of liquidity would then be in this imbalance that price had created here, right? So that would be a fair value gap or an imbalance, however we want to call it. The next Monday opens bearish because Friday closed bearish. Monday goes into that imbalance, boom, right? New York session opens, right? This might be London session. London session goes and fills that imbalance. New York session opens, and that's when you see that wick form. Boom, 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 boom. Price turns around, flips bullish. Okay. Monday closes bullish, and then Tuesday, because Monday, let's say Monday's up here, right? Very close to this new order block that was created here. Monday opens bullish and closes bullish. Tuesday opens bullish and then just completely rips, right? Because this structure is now formed. There's a new order block that has been created here, okay, in terms of structure. Okay. So that bottom wick is your manipulation. Oh, I think I already answered that. But yeah, I hope this, illustration kind of helped you guys in terms of what structure typically does, right? Especially on gold. Gold likes to fill imbalances. It doesn't really like to, do manipulation like this, okay? So what typically works on gold is a fill of an imbalance before price distributes, okay? Got it. Need to dig into your course material used to different concepts. No, for sure, man, Sham. Don't worry about it. I mean, once you go through everything, it'll all tie together, right? So the overall structure, you can then find your bias, and then on the day, right, using that same form of structure, you can then find your entry opportunities to trade price toward your higher time frame bias, right? Cool. Any other questions, guys? Any other concerns? I know that might have been a lot. See, Sham is typing there. Do you have a specific entry model? Yes, I do have specific entry models. On gold, I haven't, I haven't added the gold entry model to the course yet. I never used to trade gold, but Z kind of sparked my interest in gold a lot now for the past, I'd say, few weeks. So yeah, I will likely add something for gold for you guys also. Let me just quickly show you guys something I've been working on for gold. Let me sign in here. Come on. Okay, let me just grab this here. Reports, analytics. Okay. Let me just share my screen now. Okay, so this is what I've been working on for gold. This is Traders Casa if you guys want to use a different platform to back test. But this is just the free version. It's good enough for me because I just want to test the entry models. So yeah, on gold, I've been having pretty good, days in terms of structure. I've mainly just been risking 1% on this entry model for gold, and here you can see what price is looking like, or rather what the back testing data is looking like, sorry, for this entry model. All right, so looks pretty good, I'm not gonna lie. But yeah, that's basically it in terms of entry criteria. I think it's this one. I've been testing it, and that's also why I wanted to forward test it tonight, in terms of, this 30-minute entry there on gold. But what I typically look for on gold is a 4-hour structure matched with daily structure, right? So on the day, if I'm looking for, a continuation of a bullish move, I want to see a bullish order block on the daily time frame. Okay, there's my bullish order block. This candle hasn't fully formed yet, it hasn't closed. And then I want to match that up with a 4-hour order block. Okay, so I'll play it out and then just wait for a 4-hour order block to form. This does take some time. In most cases, you'll have entry or trading opportunities at what times now? 2 a.m., 6 a.m., 10 a.m. Just now, 2 p.m. Yeah, 2 p.m., 6 p.m., 8 p.m. Is it 8? No, I'll check it again and then I'll see. But when I fully form it, and then you guys can obviously look at it, right? But it will be a full playbook that you can trade. So as you can see, on the 4-hour, we have this order block that's currently developing here now on the 4-hour time frame. As soon as this one closes, there we go. So this 4-hour order block has closed bullish. Okay, I then go back to the daily, see if the daily is still, so the daily is still bearish on the day, but overall structure is still bullish, right? Because this daily candle hasn't closed yet. Okay, now I want to go down to the 30-minute time frame, and since that 4-hour candle closed, well, the 4-hour order blocks closed, okay, bullish, I now want to wait for a new 30-minute bullish order block. Okay, these are invalid because this was created before the 4 p.m. candle for the new order block was created, right? So here you can see this one is 6 p.m. South African time, this candle of the 30-minute. So now what could happen is this 30-minute could potentially come and take out all of these lows here for liquidity, create some new structure, and then follow through. Okay, so I'll play it. Let's see what happens. So no new 30-minute order block yet. Okay, so since this is the free version, we just need to wait for these ads quick. 5, 4, 3, 2, 1, cool. So I'll wait for that new 30-minute order block, right? Specifically a bullish one to be created. There we go. Right, so this would then be a lower probability move, right? Because price is so close to this previous order block here. There's also an imbalance here on the 30-minute time frame. Let's see, the daily is also still bearish, which isn't something that I want to trade, right? But just for execution sake, so you guys can just see, what it looks like, I would then place my stops just below this 30-minute, and Elvis, this was also inspired by you since our chat last time. I would look for 1 to 3 risk to reward there, catch an entry there. I risk like 1% on that trade. This is just for practice sake, right? And then you play it. Okay, what happened now? Because it crossed over into the weekend. Okay, anyway, but yeah, you guys get the gist of it. I'll record a full thing for you guys so you can see. This account started at $25,000, and I've just been risking 1% on it just to test that entry model on gold. But just depending on how you want to risk, right? You can either stack your entries and then trade those stacks to go full margin, or you can risk 1% per trade, or you can risk 2% per trade, 5% per trade, just depending on your risk appetite and how you want to look at your trades overall, right? But yeah, I think we are way past 9 p.m. I think a lot of guys want to attend to their families again. But before I end off, do you guys have any questions? And like I said, I'll make this nice for you guys and then post it in the course content so you guys can trade gold confidently as well, right? With good structure and mainly just price action. No BS. No questions? See Sham is typing. Thanks, bro. You're welcome, Sham. Well, yeah, guys, I think that's it for us tonight then. Let me know if you have any questions or if anything comes up. I'm always around. And yeah, have a good one. See you guys. Wait, a new message came through. Oh, that was in a different chat. Okay, have a good one, guys. See you. Good night.